I think 2019 was probably the best year of the economy in my lifetime. You had low inflation, strong labor market with growth at the bottom predominantly, strong productivity growth. Obviously, the pandemic threw that off, but I think it's possible to get back to that.
Yeah.
It really showed the policies that we know what works, and we just need to return to that. This isn't rocket science. It's just a commitment to say no to the special interests and focus on what's good for the country.
Hello. Welcome again to an episode of the Let People Prosper series. My name is Dr. Vance Ginn. I hope you're having a prosperous day. Well, today I'm delighted to have on another guest where we can talk about the housing market, the unaffordability, the situation during COVID in the housing market and everything else. And it's none other than Mark Calabria. Mark, welcome to Let People Prosper show.
Vance, it's such a pleasure to be here.
Well, it's really a pleasure to have you on. We're recording this on December 11th, 2023, and it's been a wild year. You know, we were talking about before we went on how it's just flown by. It's almost going to be 2024 soon.
Yeah, it's pretty crazy. I mean, again, this year has really flown by, been very eventful for me in a lot of ways. And looking forward to hitting 2024 and getting through it.
Amen, brother. Amen. Well, let me go for the audience, read your bio here, and then we'll jump right into it. So, Mark Calabria is a senior advisor to the Cato Institute. Calabria is the former director of the Federal Housing Finance Agency, which regulates and supervises Fannie Mae and Freddie Mac and the Federal Home Loan Banks. During his service at the agency, Calabria led the response to COVID-19, which we're going to talk about some of that today. Prior to this, he served as a chief economist to Vice President Mike Pence. He served as a senior aide to the U.S. Senate Committee on Banking, Housing, and Urban Affairs under chairs Richard Shelby and Phil Gramm, who we've also had on the show here recently. Great guy. During his Senate service, he's acted as the primary drafter of the Housing and Economic Recovery Act of 2008, which established a stronger regulatory framework for the government-sponsored housing enterprises. Prior to his Senate service, he served as the Deputy Assistant Secretary for Regulatory Affairs at the U.S. Department of Housing and Urban. He holds a doctorate in economics from George Mason University. So, Dr. Calabria, why do you do what you do each and every day, Mark?
Well, Vance, I mean, I think the evidence is just so overwhelming that if we get good economic policies, it makes a tremendous amount of difference in people's lives. And while it's easy to get caught up in the statistics and the trends, behind every statistic is a family, is an individual. And, so for me, I've dedicated my career to human betterment, to try to find the policy solutions that allow people to pursue their dreams, to build companies, to build wealth, to eventually pursue their dreams. So again, deep interest in policy, but ultimately trying to create that policy framework that lets people live a better life. It lets people prosper.
There you go. I was waiting for it. Exactly. Well, and what got you to this point, Mark? I mean, looking back at your life and thinking about the different institutional changes that happened in your life, what made you get to this point now and making these decisions to get into public policy and everything?
Well, interestingly enough, and I don't want to sound like the Great Depression generation, but I finished my undergrad during the savings and loan crisis. And this really was that early 90s where we started the word, jobless recession recovery started being a phrase that was used common. And while I had a deep interest in economics, my primary reason, half my reason for going and pursuing a PhD was because the job market was weak. So I could say my opportunity costs were lower. Yes. But it was as much driven by wanting to understand how we got in that situation, and wanting to kind of have a framework for the world. I sometimes, quip that I started out undergrad as an accounting major because both my parents were accountants, but I quickly determined I didn't have enough personality to be an accountant, so I had to go into econ.
Nice. Well, that's interesting too, because I also started out as an accountant and then went into econ later on. So that's interesting. When you're thinking about all that, and you came out in the savings and loans crisis and was a tough job market after that. Whenever I was graduating from Texas Tech, it was right during the financial crisis. And that was a little bit after that, I guess, but right around that time when I was going to grad school and things of that nature. And I was like, well, you know what? Instead of just getting a master's in economics, let me go ahead and get a PhD, because I know it's going to be a tough job market there for a while. And so that can lead you in a lot of different directions. And I think it may go back to what you said earlier about why you do what you do every day, which is to help people. But is that really what, get you going about public policy and making lives different in that way?
Absolutely. I mean, I've been fortunate having worked on Capitol Hill, working at White House leading agency, that I have seen the right person in the right room at the right time can actually make a big difference. And so, again, I understand the tension of sometimes it's like pushing a boulder up a hill. Sometimes you lose one, sometimes you win one. But again, having seen it close up, I know that you can make a difference if you're willing to get involved. And it's always a bit of a tension. I think of myself as very much a libertarian, who's very much in favor of limited government. So it may surprise some from that background to say, I think we need to get more skeptics of government involved in government, because you do want the right people in the room who are willing to ask tough questions and who are thinking about this at the end of the day, that there are individual lives that are being impacted. Every regulation, are a better way of thinking about it too. You as a Texan, you'll be sympathetic. As you mentioned, I got my start in policy working for Phil Graham, and he would always have his Dickie Flats test.
There you go.
Is the use of public resources, public dollars, proposed worth taxing this little printer, Dickie Flats? And again, it's just a reminder that there are real people who have an impact upon all this. And of course, I feel extremely fortunate. I was in college when both the Berlin Wall came down and when apartheid ended. And it really, to me, these were things that people said only months before would never happen. I mean, I was when I was in high school, it was like the Soviet Union is part of the permanent landscape.
Yeah.
So freedom can happen. It can happen in a short amount of time. It could really see big changes. And while, of course, fair to say Russia hasn't ended up where we all hoped, but many places like Poland, for instance, have. And so the power of economic freedom and the global decline in poverty that we have seen with the opening up of markets after the fall of the Berlin Wall, I think it's just been astounding.
Yeah.
I think it's very hard for people to understand and believe today what the world looked like, say, in 1989.
Yeah. Yeah. No, great points there, Mark. You spent some time at the White House. You were there longer than I was. I was there for about a year during 2019 and 2020. I've got the picture over here, actually, of the Eisenhower Executive Office Building. And you spent a lot of time there working with the Vice President Mike Pence. And I wonder what you could share from your time there in the White House.
Sure. So I was there about 26 months, came in first week of February in 2017. And really just had a tremendous time. I thought it was a great economic team. I worked on the Tax Cut Jobs Act. I worked on USMCA, on our renegotiation of NAFTA. We did some modest financial reform on Dodd-Frank, some community bank relief, which again, I thought was a couple of steps in the right direction. And I would go as far to say, I think particularly the corporate tax cuts were just so important for investment and economic growth. And that, to me, probably one of the best things, certainly top 5 pieces of legislation that I think have been passed in my lifetime in terms of economic growth. I think even we're feeling the impact of that today. So it was really just terrific to be part of that process. And again, I kind of think my role was, if you think about it, you were internal, so you'll get this, but I'll explain a little bit. Probably 80% of my role was being NEC for the VP, and I would go into the negotiations with the White House and represent the vice president's position, which was generally a limited government, smaller, let's restrain spending, let's back on regulation, while also keeping him informed. I don't know if this is as widely recognized. There's nobody that the President Trump spent more time with after the first lady than the vice president. They talked every day, regardless of where they were in the world. And the vice president was in the unique role, and he was really the only person who got a lot of one-on-one policy time with the president. So a lot of my job was simply making sure that when President Trump turned to Vice President Pence and said, "What do you think about X?" that I had prepared the vice president, to know where we would be, to also know, other principles were, so that the vice president would know what Treasury was thinking, or Commerce, or CEA. So a lot of my job was simply keeping him up to date on where the internal debates are. And I don't think it's as broadly recognized. There were a lot of internal debates. You think about it, having been in the room with President Trump on trade issues, and you could imagine you got Peter Navarro over here, and Lighthizer a little bit more over here, and then Gary Cohn and Mnuchin and Kevin Hassett. Wow, could you imagine a wider range of opinion on trade issues than that?
No.
And it all got heard. It all got hashed out. The president was encouraging everybody to, I never saw him push back or disagree. He really gave everybody an opportunity to make their case. And so extremely deliberative process from my perspective. Now, there were always some people who would try to go around it, but, we really did try to work through the issues. And you recognize in these processes, if you feel like the process is fair and you've made your case, then that's the important part. As an advisor, you're there to advise. You're not the one that got elected. You're not the principal. And, if you don't like it, you feel like your advice is being ignored, you leave. But I felt like that my input and the vice president's input made a big difference. And again, I felt very strongly about the process. They were just terrific. Anybody who hasn't read Kevin Hassett's book, The Drift, or Casey Mulligan's book, You're Hired, those are 80-90% consistent with my experience. And they're very straightforward, easy reads. And I really would recommend that. So again, and I really felt like for the most part, we were looking at economic growth. And again, let me put it this way. I looked at what we were doing through two fundamental levers. A, productivity, because you don't grow wages without increasing the productivity of the economy. And then the other part that I was probably a little more bullish than others on was labor force participation. I thought with the right changes, in tax incentives, the right changes in the labor market, there had been a decline in labor force participation through almost the entire Obama years. And, some of it was demographic, of course, as we get older. And even in the initial forecast out of CEA, they had assumed that sort of trend was declining. But I was much more in the camp of, I think we can set up some policy incentives that get people back in the workforce. And I think we really did that. And of course, there were other great people. Tomas Philipson is one of my favorite people. We had a really great team there. But again, at the end of the day, what I really thought we were doing was trying to increase productivity, increase labor force participation.
No, I think, and that happened. We were seeing that 18, 19, and of course, 2020 kind of threw that off with COVID.
It did.
But, just a little thing there. But, in my view from there, the White House. So I was on the second floor, right around from the ceremonial office of the vice president. So had you been there at the same time, we'd have probably been right around the corner from each other. It was an interesting time. I mean, I definitely learned a lot during my year there. I was an academic and then worked in public policy in Texas for a while. So going in the White House was like, politics on steroids, but I enjoyed the people. I enjoyed the process, as you said. And at the end of the day, I was glad to serve for a year and then go and do other things. Like when COVID hit, I was like, I got to get back home. It's where there's going to have freedom and stuff for a little while. But there's some extraordinary people. And you're right, too, that there are some big debates that happen. I mean, I remember being in some of those about trade and other issues that were happening, that it really does happen that way. It was phenomenal. And so you did a lot of great things while you're at the White House and looking all those. And then you had the opportunity to go lead the FA. Right. What does the FA do that most people probably hadn't heard a whole lot about what they do? So what did you do while you were there?
Which is interesting because the Federal Housing Finance Agency, FHFA, supervises a $7+ trillion footprint of our economy. So it's a pretty big impact. At that point was an independent regulator. And, I had worked on the legislation during 2008 that created the agency. So for me, there was almost a bit of parentage to it that, we needed a strong supervisory framework for Fannie and Freddie. They blew themselves up in 2008. They contributed to the 2008 crisis, one of many causes, of course. And so I felt very strongly that we needed to get this right. And, I also felt very strongly, I had worked for Senator Shelby when he led the opposition to the TARP bank bailout. And of course, we lost that fight. But, Vice President Pence was always fond of saying in many of his speeches, and again, he's the vice president, so I never pushed back on this, but he would always say he was the first member of the House of Representatives to publicly come out against the TARP. So I was really animated by, we needed to do something about these bailouts of large financial institutions, starting with Fannie and Freddie. But of course, covering Citibank and anybody else in the financial sector. And so going to FHFA really allowed me an opportunity to build upon that.
That's great. And whenever you were there and working on that, there are probably a lot of day-to-day things that would go on. And then we had COVID happen.
Yes.
And then it was a whole other level of new
and
policies and new things, new conflicts or consequences that happened. I wonder what was happening then for you.
So, keep in mind, from February to May of 2020, the economy lost 22 million jobs.
Yeah.
And to kind of put this in comparison, if you go back in the Great Recession, from 2008 to 2010, we lost 9 million jobs. So you compare 9 million in 2 years to 22 million in 2 months. Stunning decline in the economy from the lockdowns, from concerns about the pandemic, the variety of causes. And so normally, if you were going to have 22 million jobs lost, you were going to have stress with some of those families paying their mortgages. Because even if you're getting unemployment insurance, and of course, only about half of workers are typically eligible for unemployment insurance. But even if you get unemployment insurance, it takes you 2, 3, 4 months to get it. And there'll be some segment of families who have a really hard time kind of surviving that. So we looked at this. How could we give a timeout, not forgiveness? It's easy to forget that there were broad calls in 2020 to forgive mortgages, forgive rent. We didn't do any of that. What we did was say, we'll give you a bridge, essentially. We'll let you pause payments. We'll put it on the back of the mortgage. It's all going to be paid back. And what we were able to do was we helped twice as many people as in 2008, did it 6 times as quickly and did it at a fraction of the cost. And during the Obama Bush years, it cost about 30 to 40 billion. We actually paid for everything we did at FHFA. We had a small fee of refinancing that kept it all in the mortgage market. Obviously, this is very different than all the other spending, PPP and many other things. But I was committed to saying we can do this in a way that's fiscally responsible. We could do this in a way that's targeted to those who really need it. Part of the conversation in my book, Shelter from the Storm, is how we were able to really use economic incentives. So, for instance, and maybe you went through this yourself, but something that was really eye-opening for me during the Great Recession, I was really puzzling because, for instance, it was a V-shaped recovery in terms of spending. Consumer spending in 2008 recovered pretty quickly, but the job market did not. So I spent probably 2 years, year or two, scratching my head. What's really going on here that's dissuading people from going back to work, even if they're spending? And it really wasn't until I started reading Casey Mulligan's work at that time. And his book, Redistributive Recession, is really kind of key. It was way too much math, and it's a little dense to read. You've never taken a look at it. But the takeaway from Casey's work is that the mortgage assistance programs in 2008 created huge work disincentives when combined with other programs. So, for instance, in 2008, in the Bush-Obama era, you got 31 cents of relief for every dollar of your income. Well, the flip side of that meant that for every dollar you earned, you lost 31 cents in mortgage relief. That's not even considering, taxes you pay and all these other means assisted programs. And so, for instance, Professor Mulligan calculated for a significant part of the lower income homeowners, you were losing more than $1 in benefits for every dollar you earned. This isn't really a debate about lazy or not. It's a debate about incentives. And the long story short, we designed the mortgage programs so that they wouldn't punish work. And I actually think that one of the reasons that we had the record job recovery in the second half of 2020 was the way we set up the mortgage assistance programs was you could go back to work and you weren't penalized. And so we really tried to get the incentives correct this time around. So roundabout way of saying program design matters.
Yeah, no, that's true. And I do want to get into this book. So the book is Shelter from the Storm, How a COVID Mortgage Meltdown Was Averted by Mark Calabria. Great book. Hope all the guests go out and purchase a copy. And it's really good discussion about the past and kind of the financial crisis, but then also what was going on during this period. And it's something that I've had other guests on to talk about this, Mark, and a little bit about, I've talked to John Taylor. I've had Casey Mulligan on as well. And we've talked about those things, maybe keeping interest rates too low for too long, contributing to the boom and then the bust. And we saw some of that, I think during the aughts with probably interest rates being too low, but nothing could compare, I don't think, with the the shutdowns, the lockdowns, and what influence that had on the economy. And one of the things that I remember when I was at OMB, Office of Management and Budget, was that we were in direct discussion with Congress about what that bill should look like. The CARES Act, the Families First Act was even before that. But with the handout, the tax rebates that were sent out, the rebate checks, if you will, there were a lot of things to try to keep people, if they lost their job, afloat for a while. And maybe that was the right thing to do then. I don't think it was the right thing maybe to do later on, because there was a different situation. But the big part of this was the housing. I mean, we don't want people to be losing their houses across the country. It'd be huge.
Absolutely. And just as importantly, and I try in the book to be very frank about what we did and didn't know, and that we were operating in a fair amount of uncertainty, and that fundamentally I was an economist, not an epidemiologist.
Yeah.
And you got to remember back in the spring of 2020, I mean, all we really knew were that people were the vector. I mean, there was a concern you could get it from doorknobs. Obviously, that turned out not to be the case. And there was a lot of previous research literature on how diseases spread through homeless communities. Yeah. So the point being was we were really trying to approach this from how do we kind of keep people in their homes for a short amount of period, partly because of the job loss, partly because to facilitate the choice of being able to shelter in place. But again, so that we could reduce that spread. We were taking that, if you will, 15 days to flatten the curve part quite seriously. It was never meant to be, open-ended. And the fact today that there are, I think, about 400,000 borrowers in various mortgage programs that still haven't paid their mortgage since before COVID. Wow. It's kind of crazy to me. Yeah. So we meant this to be temporary, what did Larry Summers once say, that temporary, timely, targeted? Yeah. That's what we were actually trying to do. It was not meant to be forever. It was meant to be very short, and we required people to pay it back. And the plus is a surprisingly large people. I was actually shocked at the percent, probably about a fourth of people coming out of Fannie and Freddie forbearance, where they would send in a check for 3 months missed mortgage. So again, a lot of people had equity. It was a strong housing market. Yeah. The Fed, in my opinion, kept the foot on the gas way too long. Yeah. I would say certainly by, at worst, August of 2020, the Fed sort of started normalizing. And when again, July, August, September, that was the strongest job market we've ever seen in terms of recovery. Obviously, jobs coming back that had been lost. And again, for the Fed to continue buying mortgage-backed securities at that point, I thought was irresponsible. And quite frankly, I expressed as much to the Fed. But trying to get them to listen to anybody. For instance, there's a conversation in the book. There were a lot of pressure in calls to rescue mortgage servicers, and I talk about that in the book. And I would regularly get calls from the Federal Reserve that, Mark, we've got these facilities set up, we're ready to go. They needed Secretary Mnuchin, Treasury Secretary Mnuchin's, blessing to be able to do it. And they had figured out that he was getting a lot of his information from me. And of course, Steve Mnuchin keeps his own mind and makes his own mind up. So it wasn't like I was pulling the strings. I was just offering information, but they really thought lobbying me would help them. And it was just interesting because you'd have these conversations with the Fed, primarily then Governor Brainerd and then later Governor Quarles. And I would say, well, here's what we're seeing. Here's the data we're seeing. And, at that point, there were 346 non-bank servicers that Fannie Freddie did business with. I had their income statements. I had their balance sheets. I mean, we talked to them pretty regularly. And the Fed had nothing really. They just had kind of like, as I call it in the book, rescue first, ask questions later approach. And I think this is very, it's the norm. We think back to March of this year with Silicon Valley Bank failure, First Republic, Signature, these things. My experience in a crisis with the Fed is they really don't ask a lot of questions. They just spray money at everything. And they really have this kind of like fear of worst case scenarios. And again, I'll just put it this way, and I recognize this is an unconventional view, but I talk about this in the book a little bit. I believe the lesson of Lehman Brothers from 2008 was that if you give institutions reason to believe they'll be rescued, they won't take the actions necessary to avoid that rescue. So, for instance, we know with Lehman Brothers, there were 3 separate offers to purchase Lehman. Each time the management said, no, we won't take less than what Bear Stearns got. And so the relevancy here is there were 2 large mortgage servicers that had private equity parents. And I'm someone who's pretty sympathetic to private equity, but I'm not sympathetic to you own a company, you take billions out of it, which is your prerogative. But once you do, if you come to Washington and ask us to put billions back in, that's not capitalism.
Mm-mm.
That's not free markets. And so, long story short, once these institutions figured out, and I had described to them, if you fail, this is what we will do. We will transfer. We have full contractual ability to transfer your assets somewhere else, and I won't hesitate to do it. And of course, they would lose the value in their platforms. So lo and behold, the outcome was they were thinking to themselves, Calabria is just crazy enough to do it.
Yeah.
And guess what? They put money back in these platforms. They're operating today. They're profitable, and they did it without a dime of taxpayer assistance, which is how it should work.
Yeah. Yeah. Amen. I agree. Whenever you're digging deeper into housing, like doing the book and everything else, a lot of this is also local. I mean, there's some involvement with the federal level, as we've talked about here so far, but a lot of it is local, right? On zoning laws and restrictions. Some states, deal with that as well. But I know, I live in Texas. I live just north of Austin in Round Rock, Texas. Austin is become really expensive. If you look at places like Houston, it's still pretty affordable. Now they have less zoning, very little zoning, versus Austin that has a lot of zoning. I wonder what your research and your thoughts are on, zoning and those types of issues.
So there's a lot of great work on this. And Houston relies a lot on sort of local community covenants. So it's more, quasi-private planning, but it works a lot better.
Mm-hmm.
And so, because again, the complaint would be, well, if you get rid of zoning, people are going to put gas stations in the middle of residential neighborhoods. No, the economics are going to not drive that.
Yeah.
And you see that land use patterns in places like Houston, they're denser. You can plan better, but fundamentally, it isn't all that different from Austin. It just works better.
Mm-hmm.
Of course, I'm sure my friends in Austin would say that it's prettier there than Houston, but
right.
It's to say Houston is a place that provides opportunity across the income spectrum. And of course, the bigger examples are not even within Texas, but places like California or New England and New York. And so a lot of these local zoning and processes, and part of the problem in California is there's just so many vetoes where people can weigh in, and the environmental laws in California are just insane. They encourage a lot of litigation. They end up having the lawyers make a lot of money and nothing gets built. And so some of it is, if you even have a certain process where if a developer knows that he starts a project that he can finish, you don't have that in a lot of California. You'll never know whether you get to the light at the end of the tunnel. And so at the end of the day, you should make decisions as a community. If you want to decide this is going to be commercial here, this is going to be multifamily, okay. But once you've done that, there really should be a right to build if you meet the requirements. I'm a pretty big property rights guy. I think fundamentally, if you're not, creating a nuisance or pollution to your neighbors, you should largely be able to do what you want with your property. And again, you see that in much of Texas. You see that in much of the middle of the country. Although unfortunately, we've seen some places become more and more regulated, and this is really a problem for a lot of areas. Again, California is the poster child of they're running people away. Of course, many of them are coming to Texas. And again, you could quip that the solution to the national housing affordability crisis is just more people are going to move to Texas. But that's going to put pressure on certain places, and some places like Austin, I think, are going to react negatively. A lot of it really comes down to whether the population is fundamentally pro-growth or not. To channel maybe Julian Simon, if you will. I mean, look at people as a resource or as a liability. And to me, as Julian Simon wrote, people are the ultimate resource. People are the ultimate source of prosperity because people are the ultimate source of creativity.
Yeah.
And so I think part of the problem is a lot of places like California, they're fundamentally anti-growth. They're anti-people, whereas places like Texas tend to be very pro-growth. And the evidence is overwhelming that those places where you can build easily, you can build affordably, are places where jobs are created, and you see broad-based income gains across the income distribution.
Yep. No, I agree with that. Great points there. And so, Mark, as we're wrapping up, so we've covered a lot of ground, which has been great. I really appreciate it. I wonder, kind of going in 2024, what do you kind of foresee, or what do you hope to see by state, local, and federal governments that we may or may not get? But what would you like to see?
Well, I hope that we get some fiscal sanity. I mean, we are both at the federal, but as well as a number of states, the spending spree. And this was part of the problem, not only in the CARES Act, but much of what was done under Biden, the American Rescue Act and such. We threw a lot of money at local governments. They largely blew a lot of it and did not spend it productively. But on the federal level, our entitlements are unsustainable. Mm-hmm. It's unfortunately that we're not really having a conversation nationally about how to get that on a sustainable level. But I do worry about the fiscal path of this country. I do worry about the regulatory path. This is a country that has so much potential. Yeah. And it's a population that really, if you get out of the way of the American public and let them be creative and let them build and create, you can create so much wealth that will be widely distributed. So I'm not terribly optimistic. Obviously, you've got a divided Congress and you've got a White House that's not really interested in fiscal discipline. So I see continued kind of spending. We're not going to get the big, American Rescue style, Build Back Better type things because there's, fortunately, in this case, gridlock. But you're not going to get a lot of, change in the right direction. We're not even going to get, and even though it happened under Obama, I mean, the sequester was probably one of the best things that was done in my adult life in terms of policy. And so we're probably not going to get a deal on that either. So I really think it's going to be fiscal responsibility, if it has a window at all, is going to have to wait till 2025. Ultimately, I think we hope we get a soft landing of sorts and we don't get a recession, because those things are terrible for everybody. Yeah. But I do think we're starting to see slowing in the labor market. We've got problems in many parts of real estate, multifamily, office. It's got a lot of weakness, and we're headed for a correction there. So there's going to be parts of our economy where it's going to be a bumpy ride in 2024. But I certainly, fingers crossed, and hope we get through the worst of it.
Yeah, great points there. And I think you're right, unfortunately, with the slowdown and everything else that's going on. I would like to see some more deregulation. I think that was also one of the big things about the Trump administration, Vice President Pence, and the work you were doing there as well, is the deregulation, I think, really helped to spur a lot of growth throughout the economy, if not as much or more than the Tax Cuts and Jobs Act, which I also think was beneficial. It'd be great to see that, although I think that's also going to be on hold until 2025. So we'll have primaries, we'll have elections, but that's kind of where I'm at. Yeah.
I agree, but I hold out some hope. The courts are looking at Chevron doctrine, looking at administrative overreach. True. And there's been a lot done in the courts that have tried to pull back some of the regulatory overreach. So the truth is, for the interim, we're relying on the courts to try to peel back some of the craziest parts of the regulatory state.
Yeah, there's a lot of that for sure. Well, it's really been a pleasure to having you on, Mark, and I appreciate all the work that you're doing. Yeah. Do you have any last minute words or anything else that you'd like to add that we haven't talked about already?
Well, I just appreciate the work you're doing, and again, there was a path shown. I mean, I think 2019 was probably the best year of the economy in my lifetime. You had low inflation, strong labor market with growth at the bottom predominantly, strong productivity growth. Obviously, the pandemic threw that off, but I think it's possible to get back to that.
Yeah,
it really showed the policies that we know what works. And we just need to return to that. This isn't rocket science. It's just a commitment to say no to the special interests and focus on what's good for the country, which is simplifying the tax code, simplifying the regulatory code. I mean, you can have tough regulations, every week regulations, but they at least should be transparent.
Mm-hmm.
I mean, I think a fundamental basis is you should know whether you're operating within the law or not. So bringing some certainty back to that. All these things are doable. So I've got my fingers crossed that we can perhaps someday soon see a correction in the direction we're going.
There you go. Fiscal responsibility, a key part of what I do and what you do, and I hope what they'll start doing soon.
A big part of prosperity.
Amen. Well, the book is Shelter from the Storm, How a COVID Mortgage Meltdown Was Averted. Please go check that out. I'll make sure to put a lot of links in our show notes page and everything else. And Mark, again, thank you for being on the show, and God bless you and your family.
Well, be well, everybody, and have a great 2024.
Yes, you too. And for the audience, please leave us a rating wherever you're listening to this and share with your friends and family. Have a wonderful 2024. Until next time, let people prosper.